bottom's right around like the 8,800. So for a short-term pullback, I would say 8,800 is very good. Wow, so Bitcoin found support right around the 8,800, which is also for the past 365 days the heaviest traded level in terms of the VPVR here. You can see the point of control as well. It's exactly where this 6-year trend line hits, guys. Exactly perfect bounce so far. This is huge, but for this to continue to the upside, there's some very hard levels that we must break. This level in particular has been strong support, and it could have just flipped to strong resistance. We'll take a look at that. And as well, guys, as you can see, we did end up getting that rejection from the last 2.5-year Fibonacci retracement golden pocket. Absolutely very big. We'll take a look at that and talk about the scenarios of how likely it is that we continue down to this area that we mentioned of our ultimate buy zone, or in fact, could we even maybe go lower than that, or is the correction already over? And as well, guys, William Suberg posted on Cointelegraph 3 Bitcoin price metrics that just converged. A bull run has always followed. Even though in the short term things look a little bearish, over the next few weeks and especially months, we expect them to be absolutely very bullish. Wow, guys, let's get into the episode. Whoa, what's going on, everyone? Welcome back to another extremely episode of Bitcoin, guys. We have so much to talk about today. It's going to be huge. First off, guys, later this week, we are going to be giving away one of these ledgers also on Twitter, so make sure to follow me over there. Link is in the comments and the description. And wow, happy Bitcoin Pizza Day as well, guys. If you don't know, I'm sure you'll hear it about 30 more times today, so I'm not going to bother explaining it. But we have so much to get into in this episode, specifically where Bitcoin bounced, because this price action on these smaller time frames is finally getting a little more exciting. After basically trading the last 2 weeks in the same area, it kind of got a little boring, but now we could be entering a new zone and specifically forming a new pattern that could have a massive break in the next week. Huge! So guys, make sure if you want to enter for these ledgers, make sure to leave a comment, smash, ding, hit the like, subscribe, do whatever you got to do, and let's get into the video. Wow, and guys, before we get into the Bitcoin technical analysis, I just want to show you this chart, and this is something we've talked about, but I just want to point out Galaxy BTC posted this on Twitter. Altseason is only at the very, very, very beginning stages of this next rally, in my opinion. This chart you see on the screen right here is the entire cryptocurrency market cap except Bitcoin. So every single coin except Bitcoin. And you guys see what was forming in 2015 and ended up breaking out in the beginning of 2016. We went from, less than even $40 million entire cryptocurrency market cap, excluding Bitcoin, to altcoins taking up almost $500 billion at their peak. Absolutely huge. $500 billion, okay? From less than 40 million to about 500 billion in cryptocurrency market cap for everything except Bitcoin in only about a year and a half period, okay? It happened very quick, and we're seeing a very similar consolidation pattern. These are very similar to the triangles we show you every single day, but guys, this is just very exciting for Bitcoin. The progress is only just beginning, and if you're here for the long term, then I think you're gonna have a good time. So guys, let's actually jump into the charts here. So we got that rejection off the golden pocket, which is the 61865 here of the last 2.5 years, and I can zoom out. That's how we drew this Fibonacci here. So this is a pretty substantial one. On the highest time frame, I think this is the most important long-term Fibonacci. Again, we got rejected at the very top back in February. We got rejected at the bottom of this channel back at the end of October 2019. We ended up actually breaking above it back in the summer of 2019 when we went absolutely crazy, but we ended up getting rejected actually at the 786, which is the Fibonacci I use right above the golden pocket. So overall, we've been getting rejected either at the 786 or in the golden pocket for the past year. And you can see here, so far we got a quick rejection. 3 weekly candles so far have been unable to close in this golden pocket. Okay, the last time we had a weekly close in this golden pocket was back in February of 2020. But as well, we only got to the top. We only closed at the very top before getting rejected, pushed back down. Now, so far, we're closing at the bottom of it, right underneath it, and getting that rejection. So again, what are the chances that we have a continued pullback for the next week, or we head up higher? I definitely think a continued pullback, like we talked about in yesterday's video, is the most likely and also the most healthy for this market over the next few weeks specifically. Now, what I want to show you here as well, that we talked about the 8,800 for the past week being a nice pullback area, and so far that's what we've gotten. But guys, you have to realize technical analysis is changing every single day. A lot of the times when people upload videos, the analysis has already changed by the time they upload the videos. So very short shelf lives, but that's where you have to realize multiple targets. So it doesn't make sense for anybody to call out one target and then, if they hit that target or not, that's what you base their TA on. There's multiple targets. So for example, we hit this first pullback area, the 88, and if we get a bounce and we fail that, then there's going to be another downside target, and that's why you want to have multiple targets. And guys, we talked about 88. If that gets rejected, the next level obviously is going to be this weekly 21-week moving average down here, which is where we have this box right around 81, which also lines up exactly where this golden cross is, which again, guys, these tend to have been dumping over the past year instead of pumping like they historically, or at least traditionally, according to analysis, probably should. They don't really pump immediately anyway, but we've been coincidentally, I guess, getting dumps immediately as we get the cross. We had this cross like a day or two ago, and we got the dump like the exact day that we got it. And again, guys, this is like barely a dump, first of all. So, I mean, this isn't really a dump. For anybody new watching these videos, which for some reason there's a lot of new people joining, this is not really that big of a dump. So be prepared for much bigger dumps because this is not anything too substantial. Things get a lot crazier than this. This move from 9,800 to 8,700 in 2 daily candles is basically nothing. But yeah, as well, one of the reasons we have this as a pullback area, for the last 365 days, the point of control, the highest traded volume on the VPVR here is this red line, which as you can see here is exactly where we got that bounce. So obviously, I mean, there's just a lot of stuff going on there. For example, back in the summer of 2019, we had a lot of support here as we formed that descending triangle, and then we tried to break above it. We found support here for a few weeks before falling. When we broke it, we absolutely plummeted through. Same thing here. You can see this is some sort of, a lot of people are calling it a regular head and shoulders, and that's why it broke down, but again, this was caused because of what happened in the world, but again, I guess that could have been just a regular head and shoulders. It doesn't look too bad now, but you can see where those shoulders were forming was right at the point of control, and you can see when we had that massive pump from 77 to about 9,000, the first area of short-term resistance and then turn support we got was also right on that VPVR. So specifically though, over the last few weeks, 8,800 and 9,200 have been huge. 92 has been a very big level of resistance. 88's been pretty good area of support. And I can show that to you here as well. You can see 88 right about here. We spent a lot of time, got 2 major bounces there. Okay, this bounce and this bounce, which were pretty prolonged. And then as well, for support, well, originally we found resistance right around 92, but then when we came back down after bouncing off 10K, we found support a decent amount of times right here around 92. And you can see that 92 is now pretty strong resistance, and I think it probably will be strong resistance for a little bit. At least a few more 4-hour candles. This will be interesting to see if we could get a continued bounce here. Again, this blue line is very important. We're looking on the 4-hour chart, but this blue line goes back 6 years. So we're looking at these small time frames, which really don't mean that much. However, with these small time frames, we also have this massively important 6-year long time frame structure right in the picture as well, just because it's trading so close to these smaller time frames right now. So huge. It's expected we get a bounce here. I think if we get rejected along this moving average and as well as some other things on the smaller time frames, again, guys, I'm not super concerned with like what happens on an hourly chart. I don't think that's really that important. I definitely don't recommend, trading 10 times a day. I think that's really silly. Max, I make a trade like once every week or two. Really not interested in making, 10 trades a day. I think that's the easiest way to lose your money. But also you can see for the past few months as well, you can see this is also the point of control right where we got that bounce, okay? Most traded volume right here, right at that 8,800. So there's a lot of charts that show 8,800 as a very strong area. Specifically on this chart, you can see we've had this on here as well, and we have the same targets, but on this chart instead, this is the daily, we have the 92 as this yellow line, and the 88 as this other yellow or orange line. So this box has been pretty important. You can see this plays a pretty strong role of resistance and support going back for the past few months. Actually, this is an entire year of data, not just a few months. But this is where we got the bounce right at the bottom of this one, and you can see we're finding resistance right at the top of this one. So again, very important channel there. If we break out of this channel, I definitely expect the next target to be all the way down at that $8,100 level. So huge, okay? And as well, what do we have here? We actually got a little bounce right where we talked about the point of control here, which is around that 240. A bigger pullback would be around 205 to 215 billion for the entire cryptocurrency market cap. And yeah, so those are my targets to the downside for right now, because I think the momentum is swinging down for right now. But overall, definitely within the next week, 2-3 weeks, even going further than that, 100% I think it's going to get very bullish here. But guys, as well, let's take a look at this article by William Suberg. 3 Bitcoin price metrics just converged. A bull run has always followed. So as revealed by Timothy Peterson of asset manager Cane Island Alternative Advisors, and as of May 21st, the largest crypto was still firmly bullish according to 3 Bitcoin, 3 metrics that he uses personally. So April 29th was only the 4th time in history they converged, and we'll talk about them. The Metcalf value, the lowest price forward, and the 200-day moving average. So real quick, we can just give a synopsis of Metcalf's law. It states the effects of telecommunications network is proportional to the square of the number of connected users to the system. So it's basically an algorithm for networks here. It says here, communications technologies and networks such as internet, social networking, and as well, you can include Bitcoin in this because Bitcoin is a huge network. So anyway, let's get back into this. Tracking the basket back several years, the previous convergence occurred just before Bitcoin's bull run, which began April 2019. Okay, and we can show you on this chart. This is what they're talking about here. This run from about 3 to 4,000 all the way up to 14,000 is what they're mentioning. Bitcoin's Metcalf value is a more complex quant calculation, something on which Peterson wrote a dedicated guide due to its implications. So basically, what this predicts is a minimum value in US dollars for Bitcoin on a given date. He states here that as of December 31st, 2020, it should be no less than $10,500 at the very minimum. So that's not saying that we're going to cap out at $10,000. That's saying, according to this data that he's showing here, by the end of this year, the very last day, the very minimum that he's expecting Bitcoin to be trading is $10,500 US dollars. Could be 20,000, okay? According to this data, but it also could be 10,500 according to this data. And then basically one final note here from Plan B, who created the stock to flow model, has demonstrated a price of about $300,000 following the halving is very possible, and even double that. So roughly about 600,000, over $500,000 per Bitcoin during the next 4-year cycle is very likely for Bitcoin. What does that say for altcoins? If Bitcoin would go up to $500,000 US dollars for any altcoin fans out there, what could that mean for some of your favorite alts? Would that mean they go to zero, or could they also increase percentage-wise as much or even a little bit more? Huge, guys. So very cool. So let me know what you think about this as well. Happy Pizza Day. Thanks so much for coming by, guys. Make sure to drop your comment for the ledger, and yeah, we'll see you in the next webisode. Peace.